The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, at noon, 11 o'clock till noon. And not only that, that's on market days, of course. Thank you, Steve, for 2 great hours. And we have, mic is distorted. We have an hour coming up here. This is the Tiger Technicians Hour, of course. Today being Wednesday, Larry Pesavento comes on at noon. You've got program right through the day. Daryl Martin, Dave White, Tom O'Brien. This is one of those days that I think is going to be a very, very big clue informer for us. Oops, did I not get the charts? Oh boy, this is one of those days, I guess. Yeah, there's the chart right there. Click, 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 click. There we are. Sorry about that. There was just a lot going on beforehand, and now we're all set. Ooh, let me run the numbers. The Dow is up 31, has been up, has been down, has been up. It's now up at 16,211. Got a way to go to get that leg D in the daily to get your 16,301, which starts leg D. That would only be a leg C for the Qs and the S&P. So this is, we'll go through those charts one by one. We're looking at the S&P up 4.40 at 1849. Let me go through the comp index is up 21 at 4309. Now gold is very interesting because gold is down $18 at 1324. Look at this. I need to show that because I'm bound to forget. Look at this. Look what's going on. You've got, that is a buy right there. So what we've got is you've got gold, the continuous contract. Let me move this away. I completed. Starts off at 1202.30 back on the 31st of December. That was the day that the Dow made its top. Inversely, you've got gold making its low. What happens? Gold starts off very strongly, goes to leg A, peak A, B, C, D at 1729.80 on the 27th of January. It makes that D. Let me just quickly go through in the Chapman Wave methodology, and I'll be giving a talk tonight at MIT. It is for the Boston Investors Group. And I'll give some information in a very short while, but I'll be there starting at 7 o'clock. I'll be showing these charts. Look, gold gives you your buy signal to buy mode to what the requisite peak D. That's where you can expect. It doesn't have to happen, but that's really where you start to anticipate there could be a pullback of time and price. Yes, there is a pullback of time, of price, not so much time. Just a couple of days, and it touches, goes from the 1280 area to 1237 area. Then it starts to bring you peak A, and all you're doing is you're labeling each successively higher peak, just like you label the troughs on the downside. And what happens is it goes, that's interesting. That's interesting. Oh, I clicked it earlier on. It goes, peak A, peak B, peak C, and then that's E/C, because I wasn't 100% sure, but everything looked like it should go to at least a D. And what does it do? It goes over the 200-period exponential moving average. This is the gold continuous contract. For the very first time, it goes over it. And what does it do? It makes your peak D today, because I don't see today by the close for us to turn around from the 1328 level to go above 1243.90. So that says that there's a peak D. Now, is this going to be a of time and price? Is it just a consolidation? I'm thinking it is a test of the 200-period moving average in gold. It says that you should be able to, should pull back. The 9-period exponential moving average is around about 1320. I suspect it could even go a little lower it's saying that the barrier of the 200 moving average, having taken so much time, let me just squash the chart, this is the daily chart, having taken since really it broke down back in December of 2012. This is the first time it got close. This is the first time it's even managed to break above. So that takes a bit of effort, and it needs some time now. Not that much time. It needs a little bit of time to resolve itself and say, hey, I've now been above the 200-period moving average. That is now going to turn into a little bit of a repellent. And at some time, we're going to see if the technicals hold with the stochastic at 94%, the MACD is still strong, whether it can hold, and we will be able to see something like the 1320 to the 1328 level, 1333 level with the 200-period moving averages become a support level for moving gold to the upside in March. That is going to be the big issue. Is this it with the move? Have we made the H pattern that starts going to an M? Is that the completed M? I don't think so. I think there's still room to go a little higher. I think it just needs a little bit of time out. Spectacular move in many of the gold stocks. Many of them are either D or an E. Now, let's do a couple of other things. You've got silver, 75 cents, 21.20. You've got, I don't know what's going on. You've got 21.20. You've got platinum down, just a tad down. Oh, no, it's more than that. It's down 10 at 14.28. High-grade copper is at 3.24, and you've got crude oil up a little bit at 1.5. I still got some strength in the oil sector. I'm waiting for leg D. Just give me 1 second here, and I'll see it. Change the mouse. Got so many things going on. It's getting a little complicated over here. Very demanding. I think there'll still be a leg D in the to the upside in crude oil. It needs to go of 103.80, and you've got bonds up 5 ticks at 133 and 30 seconds, and you've got the dollar is up 35. That's what I said to subscribers to my opening call this morning. I said, folks, expect that gold's going to be pulling back here, making a peak D, and that gold could have a bit of a bounce, and that's exactly what gold is doing. I think we've covered a bunch of things. Question in the den about the IYT. Yeah, the IYT, the transportation iShares. Let me just get to it right here. The daily has gone to, why did I do that? That is a peak C to the requisite D, and we're at peak D right now. I'm putting a plus sign because so far I don't have anything of a sell signal. And there's your up arrow from the 125 area. I think it's holding very well. I'm not sure it's tanking. We'll have to wait and see. But there are a couple of clues that tell me we're getting close. We're within, let me just see. SPX.X. That is peak B in the daily. S&P, stochastics at 90%, MACD still very strong, and I suspect we'll go to 1858.72 or higher for leg C, and that could be within by tomorrow, maybe even by Friday. But I suspect, and this is going to be really important, we will not make it up until next week sometime, possibly the first week of June is what I'm looking at, and I'll be watching the transports. I'll be watching this little guy over here called the volatility index, the VIX, which is turning the 9-period exponential moving average into resistance. I'll be watching the IBB, which I still haven't yet got a signal. It's in leg D. I'm calling it D. I would have loved to have called it an A, but calling it D for now. And E in the weekly. This is the iShares Nasdaq Biotech. I'm watching this like a hawk because I would like, again, to give this a shot at going short. We should still be long, but we won't. We're not. And that's the way it is around here. You got to watch these different sectors because these are your clues. Let me just go to, if you don't mind, I want to go to the, there it is. I just want you to go back to the high-grade copper. High-grade copper at this particular point made a peak D, and I can't go to a down arrow yet. So this is very interesting. It gave a buy signal to buy mode, and I've got a very sharp D, but you see that candle like a doji? It's just a well of information that goes with this particular candle. I love to teach it in my Master Trader series because I can spend time on it and we can actually watch it live. At some point, we'll find some very short-term trading vehicle that gives you that kind of pattern. Then you watch how that middle, that body, that candle becomes so important, as well as the outside of those long-legged doji wick high and low. So meantime, I don't have a down arrow yet because the MACD is not turned down, but it is under the 9-period moving average for the second day. Watching it real closely, I'm just convinced that the bonds in a trading range, copper's in a trading range, and that means yields are in a trading range for now until we start to see something break out decisively. That's just the way I'm going to keep it. Now, there's one thing I want you to look at my nose here. Yeah, that's there. Let me just do this very quickly. Go and find it. Bring your head around. There it is. Boston Investors Group meeting. That's tonight, Wednesday at 7 o'clock. MIT Building, E51, room 335. And that's in Cambridge, Mass. Basically, it's the corner of Wadsworth and Amherst Street. It's on the 3rd floor. It's the Tang Center for Management Education building. It is the building on the corner of Memorial Drive. That's the one that actually faces the Charles River and gives you that beautiful view, most magnificent view of the Back Bay and downtown Boston and the State House, the Gold Dome State House, and the very next street, which is Wadsworth, I believe, or is that Amherst? Amherst, one of those. So it's on the corner. It's really quite easy to find. In the labyrinth of MIT, I always say that you really need a degree from MIT to be able to find your way around. This particular building is quite easy. So let's do a couple of things here. We've just got a minute and a half to go for a break. I wanted to show you something that I've been looking at, and let me move this away. All right. When you're looking at different charts, I love to look at the different time frames. Let me explain why. In looking at the Dow, look what we've got. We've got a very nice move off the 15,340 lower of the 5th of this month. But it's not anywhere as spectacular as, let me just show you. You see that falling axe formation from the Chapman wave methodology? We haven't even gotten close to the resistance at 60,358 yet. You've got to snap through that to be able to use that pattern. What pattern is it? Look, here's the NYA.X. This is the New York Stock Exchange. Look, it just broke out. And having broken out, peak E right over there at 10,406, pulls back all the way to 97.32, and then it breaks out. I will be back, and I'll show you something with these time frames. Basil Chapman, Tiger Hour. Something's going on, and I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, and this is the Tiger Technicians Hour, 877-927-6648. Love to take your calls, and the Dow is up 61 at 16,240. S&P is up 6.95 at 1852. Now, this is going to be very interesting for me. Someone asked me about, could I look at Federal National Mortgage Association, FNMA. Now, I've done this once before. I keep hitting the wrong mouse. Let me just move it over here. Okay. And I'll get back to this one over here. So I'm going to do this as trading at 4.1900. So this is normally I'd call this a pink slip stock. I don't even know if they have pink slip stocks anymore. But once you see a stock that has a decimal point and then 4 numbers after it, you always got to say, oh, okay, that's not on the big board. That's being dealt with differently. You've got to deal with it differently. The way that I always recommend dealing with it is to say, you've got to look at the volume. If there's little volume, I say be real careful with these. If there's huge volume, like day alone, this has got 43,731,000. So it's a Fannie Mae, and no problem there. Certainly, it's got backing, it's got everything about it. So it just happens to be one of these silly labels, and we'll deal with it that way. I'm just quickly doing the notation, and the notation says that it should be a minus, and that's an A, that's a B, that's a C. Oh, wrong letter. That's a C. That's not an N. There is no N. That's a B. And that's a D. Now the big question is, is that an E, and I'm going to call it an E. This is now the weekly chart. So very strong, broke over the 200-period moving average. This time, we're into the midweek, and there's a chance that it's going to close above 3.75. Will be the first time it's closed above the 200-period moving average in a very long time. I just want to quickly do the, it's always hard to see these stocks with the exact low is. The low here is 0.3880. That was way back in 2010. And I believe 0.21, 0.190. So it goes to an A and B and C. No, I think this should go to a D. Okay, here's what I'm looking at. 4.1700 in the monthly chart. Monthly chart is just bumping into resistance, moving average resistance, but that's not the issue. This is the issue, that the weekly chart is holding well, and the stochastic and the MACD have improved tremendously. The monthly MACD has just been building strength. That's because it's been decimated since it was a trading vehicle back in the 80s and 90s. I don't mean the 80s and 90s in the years, although in the 90s it did hit the 70s, and then it made a high in December of 2000. So yeah, it's a stock that's been in the 90s. Had a little problem, you can tell. And right now it's trading at $4.17. Now this is what I'm going to say. We're looking at a stock like this. No, I can't reach it. I have to have a little drink again. Good, a little water. And I'm ready. I'm going to take this low. I'm just going to move to the obvious lowest low. I don't care whether it's a spike down or whatever it is. But that's your first peak A right there. Here's your B, and here's your C. Why do I keep hitting the D? Because I keep changing keyboards. C. We're in leg C in the daily chart. I'm going to explain exactly what I did. Excuse me. This is what we're looking at, that very long candle from 2.2950 back on the 16th of January, but it had a high of 3.330. Well, that started another move, and this is really the start of the move. Right there, I'll put an X, it restarts. That's your first peak A. Need to double check. My eye says that was not a new layup at 3.150 on the 11th of February. It was 3.150, which is a double top. So that still remains A until you go 1 penny above it. Then you go above it and it goes to leg B. Leg B is on the 19th of February. Great. Now it pulls back and it shoots up again. This is real quick moves. MACD's at 87%. MACD is very strong. Stochastic's 87%. This long-legged doji that's forming is telling me two things. One is, tomorrow there could be a little bit of a pullback, and then it could start an inside move in the 120-minute chart, which has gone to A, B, C, D, leg E. This is telling me that this move is probably, I wouldn't say complete on the day, but there's a good chance it won't make a new high. There's another good chance it's going to have a little bit of a consolidation starting tomorrow, and then it should move up and make a new recovery high to 4.4501 or higher. So I hope that helps you. It's going higher at this particular point. I'll talk about
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. The Dow's up 46, S&P's up 537. Let me quickly go back to what we were talking about a moment ago, and that was Fannie Mae. Let me just do that. This is a very interesting pattern. Let me just explain what I'm looking at, FNMA. The pattern I'm looking at in both the 120-minute and the daily says that even if you go above it to leg D, and if it closes anywhere around where it is right now, that is, on the day, it says that you can go higher, but you're going to come back and test the 4.18 area. You can go below it, and you're coming back to test the 4.18 area. Chances are it's going to have a little bit of weakness tomorrow morning and then start an inside move within something like, I wouldn't even say the 120-minute. I'll probably say it's more like the 10-minute, maybe the 30-minute, and then it's going to make a leg A, B, C, D within that. Very small little moves to the upside, and then squeak to the upside, go to around about just about 4.49995, maybe 4.50, maybe even a tad above, 4.501, just a tad higher to make that leg D, and that would be maybe by Friday. And then I think it takes a little bit of a timeout. So it's getting close to where I'd be taking some profit, and I'd be looking to have very short-term trades on this until it makes the new high. That's number one. Now, number two is the weekly chart. You want to see a close anywhere above 4, preferably somewhere where it is right now, Friday at 4 o'clock. That'll be very good. Now, I had a bunch of questions. Questions were... Yes, on the QQQs. So you've got 1, 2, 3. You've gone to leg C. Now the Qs are matching the Dow. Dow's in leg C. Well, it was in peak C. It needs leg D. And the Qs are in leg C. So they're a little bit behind. And a leg D in the weekly and leg E in the monthly. The IWM, and here we go. The IWM, that's the Russell 2000 trading at, it's also in leg C. Yeah, it's very interesting. This is leg B, and now it's in leg C. In the daily, the weekly, I'm going to have to call this leg D. I got so many mixed signals here in the weekly charts when it comes to this weekend. So there's going to be a lot of work to be done, especially early next week. But I've extended E in the monthly chart of the IWM. So far, everything's on track to go to new recovery highs. Remember what I was saying about the Dow? And when I was interviewed with Tom yesterday, I said it's a really good chance within the next couple of days the Dow will go above 16,300.04. And the minute it goes to 05, that starts leg D. It's at that point I have to get the relationship of where the leg D is in the Dow, which is still way under the all-time high of 16,588, and the S&P, which has already gone on to all-time highs. S&P is a little bit behind you. It's up 5.72, nice move. Dow's up 50. So on a percentage basis, let me just move this away over here so I can see it better. You got 0.31% in the Dow, 0.32% in the S&P. I usually like to see the differential between the Dow and the S&P wider, with the S&P 500 bigger, a bigger gain or a bigger loss. And now what we're looking at is that the S&P still has to make leg C above 1858.71. So let me just sum it up. I'm looking at a market that says everything's on track to move higher. At the same time, there are signs that are saying how we handle the new all-time highs that I'm expecting, and in some cases are occurring, over the next 5 or so sessions is going to be really important. How does the relationship of my Dow quartet, which G is acting lousy? I mean, this is not the way G should be acting right here. IBM was acting beautifully. It's holding well. It needs to make leg D, but a quick peak A to peak, question the den about very quick A to B to C to D, especially B to C to D, says that you're going to get a pullback, but it doesn't say it's a major top. In fact, what it does say, it's the same as the rising wedge formation. This is my analysis of a rising wedge formation, not what you'd read. And the rising wedge formation says that when you get to the apex of that triangle, that rising triangle, you should pull back. The story says it should pull back sharply. I say no, it should pull back and make a little arch formation and then retest the top. That's very much what happens with your very quick A to B to C to D, but especially B to C to D. Now, the quicker we get to D in IBM, it was just 4 days ago, that it made its recovery high of 185.71, and it's at 184.59, 70 cents away, something like that, from a new recovery high. And you've got the 158.35 200-period exponential moving average resistance. So I can only treat this as a counter-trend rally in IBM. Triple M, which was an absolute spectacular leader, has really been struggling since its pullback from 140.53. That was back in December, I think it was. Let me just double check. January the 3rd. No. That was December the 31st with the Dow. 140.43 and a 140 round number open. And then it collapsed at peak D in the daily, peak F in the weekly, and leg E in the 3M company, multinational conglomerate, holding nicely the 9-period moving average, but not showing leadership here. But was showing leadership is UTX, my Dow Quartet Index. And UTX is showing leadership, but it hasn't made a new recovery high. It needs to break above 117.58 to make leg D in the daily, but 118.20 is the all-time high. And if it breaks above that, I have to consider it leg F in the weekly, E extends in the monthly, and it'll just be whatever it is in the daily, and we won't know until it gets there. So I don't really have leadership there. Let's go to Freeman in Dallas. Freeman, how are you?
Pretty good, Basil. How you doing, sir?
Very well, thank you.
Hey, Basil, I'm looking at the VIX right now. It seems like it's not doing what the market is doing. Do you think this is a good time to start a position in the UVXY? I
absolutely say that it's a very good time to start putting it on your radar. Up until now, I would have said not, but now I would say put it on your radar, but I would not do anything with it. I know it's a very mundane thing. I'm looking for higher peaks. It sounds silly that one should talk about higher peaks in a market like this when so many things are going on. That's my methodology. I'm waiting for the Dow to get to leg D, but it's not the Dow. It is the S&P, which has gone to all-time highs. Therefore, I have to expect it's totally unusual. It would be really unusual to make some kind of a very serious top as in leg B, peak B, in a daily chart, having gone to all-time highs in anything, let alone an index. I'm anticipating that somehow or other the volatility index will fall a little bit lower, and that the S&P will go. For those of you who don't actually get the S&P, but you get the SPY, SPY. SPY needs to go above 184.95 for leg C, and then it needs to pull back, make peak C. A leg stays a leg until there's a lower high bar, and that'll make peak C, and then we'll be looking for leg D, and at that point I'll have to make some decisions. But I don't see it just yet, but I think it's getting closer. Hope that helps you, Freeman. Freeman, I'd have patience. Wait until Friday or Monday.
Got you. Okay, thank you, Basil.
Thank you for calling. So, folks, that was a great question and a very simple answer based on my methodology. However, there are certain things that I want to just mention right here. In my methodology, as I say, it's a very simple concept. Well, I couldn't tell you in the over 11 years that I've been, almost 12 years, how often it's worked. Many of you have been with me exactly as we've got those turnarounds. All I can say is I have to stay with the methodology. The stochastic in the SPY is at 90%. It's just holding steady. It hasn't turned around. And I like that. The MACD is very strong. It hasn't turned around. The weekly chart, there's a lot of stuff I could discuss there, but the monthly chart remains strong. I'm advising very selectively at this particular point to be looking at shorts. We would have had a short today if certain conditions had happened on one of the major sectors that has been just a stalwart, a real leader. It didn't happen, so we haven't even tiptoed in with a little short there. And I just want to be real careful. That's all. And there are a couple of other things that I wanted to discuss in terms of just pure technique, and I think I'll get to that in 1 second. But I am going to take 1 split second of a break. I need to drink something. I don't know why my throat's scratching. So I'm bending down, and I'm pouring the water. And I'm pouring the water, putting the top back on the bottle, and I'm about to drink it. Now let's see how long that can go for. Okay. So look, there are a couple of things. I wanted to talk about things that I do right, things that I do wrong. I mean, this is an educational program. I do enough right that I feel very comfortable about talking about. I get very upset, but I did something dumb. I was looking at a stock yesterday. We went long, Aetna. I waited very patiently for a very sharp pullback. It had gone to 72.43, a new all-time high. Leg C in the weekly, extending leg D in the monthly. AET is the symbol. Had previously gone to 72.16 back on January the 15th. Peak E plunged down to the 64 level very quickly in trough A, trough B on the way down, lowercase a, B, C, D, E, and it stops dead right there. at 64.68, and then starts another rally. That rally, like the Dow, was a very quick move to the upside. It went in 1, 2, 3, 4, 5, 6 bars straight up to 72.43, a new all-time high. I've called that leg A. I wasn't 100% sure because you can get these V-shaped double tops. So what happened is we bought it yesterday at 71.29. I said we'd have a 1.5 stop. I looked at this and I looked at this and I thought, oh my goodness, what if it turns around today and it takes me out? I don't mind a 1.5 stop, but I thought that there was a really good chance by this afternoon to pull back a little bit and then turn around and go up. And I made the stop. I can't believe it. Instead of 70.60, which I thought about, I typed in 70.70, and I looked at it, and it looked okay to me. So what does it do today? It pulls back in the early morning. It had earnings yesterday, which I don't know how you can read them. They seem to be quite good, but it was a little complicated, but it seemed to be good. It takes us out for a small percentage loss, and now it's trading a point higher. It's at 71.76, a point higher than the stop. That is just dumb. I don't know why I changed it. I should have just left. I should have had patience. So that was a dumb mistake. It's still a stock you can get into because I think it's going higher, but the risk-reward is not quite the same. I just want to mention that because I thought there was a chance that if it did pull back sharply, especially with the earnings, that you don't really know what happens the following day, that you would get the stochastic, instead of being up in the 90% area, it would pull back very sharply, and that would give you that reversal signal that says, be careful. So I was silly. I do not like to jump in and jump out of stocks. That's just the way it is. It was a mistake. So, as I say, I'm quite prepared. You know, we've got other stocks that are doing fabulously on a percentage basis that we've got. I'm not complaining. I'm just saying, when I make a dumb mistake, I like to fezz up, get it out the way, and see if I do not make it again, except I have. This was the one I didn't want to make, and I did. I apologize to my subscribers. And if you actually didn't make your stop as tight and you're in it, I say congratulations, you did much better work on that. Now, I want to also mention, I've had a couple of home builder stocks that I've looked at. I showed some today that were on the list. I didn't actually give them as buys, and I also waited to see what the home builders at 10 o'clock, how the report would come out. Came out up 13%. I don't know what it was. It was a fantastic surprise to the upside. So you've got Toll at a recovery high. Oh, no. This is 39.29. Today's high is 39.23. It needs another... just another 7 cents, and it goes to leg D in the monthly chart. That's what I waited for. Didn't have patience. So Toll Brothers is acting very well. You've got Lennar, L-E-N. Lennar was acting very well, and it's still acting. Leg D in the weekly, very strong leg. What is this? Leg D in the daily. And a new leg B, I think, in the monthly. These are good signs. I mean, these are very good signs. We'll look at maybe D.H. Horton I was asked about when we get back. I'll be right back. Dow's up 31, S&P's up.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Yeah, I mentioned in the den, Terry said ITB. I'm just writing. Sorry, ITB at new highs. Yeah, this is great action. This is the home construction sector in the S&P. It's the ETF over the 200-period moving average. Look how long the monthly chart took from 2007 until right there. It just touched. I think it touched and then it pulled back. Yeah, it just touched the 200-period moving average in the monthly chart in May of last year. Pulls back. Does a complete U-turn and now it's breaking above it. That's how important this 200-period moving average is. So let's do a couple of other things here. I want you to do something else in terms of trading. I put in a trade this morning. It was just I haven't done this in this particular sector for a long time. I've just been very busy, and I decided to do that. And what I did is I bought, and instead of putting in a stop, I was convinced that we would go higher today. And I said, that's my theory for the day. There's going to be no stop. I'm buying it. It was a future. And I'm holding it no matter what happens because I feel strongly that it's going to make money by the end of the day because the Dow will be higher and the S&P will be higher. Well, I bought it. It went to a gain. No, it opened, went a little bit of a loss. Then it went to a very nice gain. I didn't take the gain, because I thought this is just the start of the day. Then it pulled back, and it pulled back and it went to a bigger loss. I was convinced, normally I'd say, you're out, just a small loss, you're out. And then I said, okay, the theory now has to be that if it comes back a second time, you can take a profit. But if you don't take a profit and it pulls back and it goes down a third time, if it comes back and gives you a gain for a third time, my absolute rule, this is what I talk about on the show, it's what I want to talk about right now, is if you don't take a profit, in fact, if you don't get your money right out of there, and you can put a new position on immediately, but that position has to come off. That's the rule. That's your rule. So it pulls back, goes down even deeper, and I say to myself, okay, do I add to this position because I know we're going higher, or do I just let it play out because this is an experiment? It could be an expensive experiment, but I needed to follow through. Lo and behold, it shoots up. It makes some money. I'm out. I'm done. That was my rule. It goes a little higher, and now, let me just check to see where it is. It is trading underneath my original price. So I wanted to say, if you have one opportunity to get out, you don't take it. You can have two, but I promise you, if on that third one you don't get out, there's a chance that that third one can really go against you. Get out of that third time, preferably if you can make a profit or even break even, and then reassess. If you've got a new position on, it's a new position, and it's a new position with different things. Now, this is what I want you to do. I'm going to be giving a talk tonight at MIT, 7 o'clock. You can go to Boston Investors Group. Just Google it. It'll give you all the details. It's over at MIT. I just want to do this. We've got Larry Pesavento coming up. I'm sure he's going to be talking about gold, just great calls on gold. And so that should be very interesting. I'd like to hear what he says about gold. Dow itself needs to break above 16,301 to start leg D. This is my scenario. I'm suspecting that the Dow is rallying here. It's not a leader. It's not a great performer. The S&P is, in fact, performing much better, but the Qs are even better than that. But the S&P needs to go to leg C above 1858.71, and then later this week to leg D. And I think that's going to take us all off into early next week. And then you've got to be very careful. I'm expecting that the Dow might not make a new all-time high here. The S&P will, and the Qs will. And then you've got to be somewhat careful. We'll be looking at the VIX after that. Hey, stay tuned for Larry, and have a wonderful day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.